3 years ago, private equity giant Apollo Global Management announced 21 takeovers worth $23 billion. And then the credit crisis hit. Founder and CEO Leon Black used debt swaps to survive, but bond investors in the companies he owns lost millions of dollars. He's in a legal fight with some of them. For more, we're joined by Bloomberg's Cristina Alesci. And thanks, Cristina, for joining us, doing this profile. This profile on Leon, which is fascinating. He's certainly a fascinating character. How did he get hit differently than other private equity firms in this crisis?
He got hit very similarly to other private equity firms. It's how Apollo handled the situation, which really makes them different. So basically, Leon and his two partners started out as debt investors, so they're very comfortable in that world. And as you know, I mean, leverage buyouts is all about the debt. What makes them different about what they did is they made all of the same bets. Apollo made all of the same bets as the other private equity firms. So they went into housing and casinos at precisely the wrong time. Harrah's, exactly. And Realogy, which is a big real estate company. So they went into those things at exactly the wrong time. But instead of sort of panicking when the markets were awry and the debt markets were showing that their bonds on those companies were trading at distressed levels, instead of panicking, they went in, they bought the debt at a discount and basically on the open market, and then they also did debt exchanges, which lowered the actual debt in the portfolio companies, and it provided on the open market purchases appreciation in their funds. So they actually made money. They made money in their funds, and they reduced the debt of the portfolio company.
So that was smart on their part, but it's opened them up to various legal fights, including one with Carl Icahn, right? That's
right, exactly. Well, Carl was not having it
because that's Realogy that we're talking about, right?
Exactly. He bought a bunch of Realogy bonds, and basically, what the debt exchange, what he was arguing, the debt exchange would actually put the new debt ahead of his, and he was just not happy with that situation, as most smart debt investors wouldn't be. So he took him to court.
Would have figured out right away. So what is next then for Leon Black after going? He's obviously still struggling here with some of this, but I mean, what is next for him?
What's next for him is what's kind of been going on throughout the private equity industry, and these companies are going to go public. KKR yesterday announced that it's going to be listing its shares in New York. Apollo is now traded on a private system at Goldman Sachs. They're hoping to bring that to the New York Stock Exchange to provide more liquidity for those holders and possibly tap the market for additional capital to build their businesses. So that's what's next. So they're hoping that their good news private equity story will relay to the public markets.
Resonate to the public.
Exactly. That's exactly it.
Cristina, thank you. Certainly always interesting to hear about Leon Black. Cristina Alesci, our Bloomberg reporter.